Friday, 17 July 2026. 3 Asia-Pacific AI stories before your first coffee. Tokyo's Nikkei 225 fell roughly 4% on 17 July as a deepening AI chip sell-off rippled across Asia, dragging Taiwan's benchmark into technical correction territory, even after TSMC posted record quarterly profit. Tokyo Electron, Advantest, and SoftBank all dropped sharply in the session, while TSMC's Taipei-listed shares slid around 7%. The sell-off came despite TSMC raising its full-year capital spending guidance to $60 to $64 billion, a signal that foundry demand remains strong, but that markets are repricing how much of that spending translates into near-term earnings for the broader chip supply chain. Why it matters? Heavy index concentration in a handful of AI chip names has turned Tokyo, Taipei, and Seoul into de facto proxies for global AI spending sentiment, meaning a single earnings beat or miss can move trillions in market capitalization across 3 time zones before New York even opens. Capital allocators running Asia tech exposure need to stress test how much of their portfolio beta is really AI capex beta in disguise. Builders relying on next-generation node capacity should watch whether TSMC's higher spending guidance accelerates or delays allocation to smaller customers. The second-order effect worth tracking: if this rotation out of chip names persists, it could redirect institutional flows toward AI software and application layer plays across the region, reshaping which parts of the Asia AI stack attract fresh capital through the second half of 2025. So, Manila's IT and Business Process Association of the Philippines has cut its 2028 outsourcing workforce forecast to between 1.85 million and 2.14 million full-time employees, down from the 2.5 million target set in its 2022 roadmap. The revenue outlook dropped in parallel. IBPAP now guides US $43.3 billion to US $50.5 billion for 2028, well short of the US $59 billion aggressive case published 3 years ago. The sector still expects growth this year, with revenue projected at US $42.3 billion and headcount at 1.96 million. So the revision signals a slower trajectory and a shifting job mix rather than contraction. Why it matters: the Philippines is the world's second largest outsourcing destination, and when its own industry body marks down headcount by as much as 650,000 roles, every global capability center with a Manila delivery node has to revisit workforce planning. IBPAP President Jack Madrid pointed to AI, macro headwinds, and geopolitical caution as the drivers, while noting that entry-level roles displaced by automation have so far been redeployed, not eliminated. The association now targets 2 million AI-enabled digital workers by 2028, effectively making AI fluency a baseline requirement across the entire workforce. A 740 million peso government retraining program is already running, pooling funds from TESDA and the DICT to produce 340,000 digitally skilled scholars over 3 years. The second-order effect to watch: whether rival destinations like Vietnam, South Africa, and Colombia accelerate hiring while Philippine operators chase higher revenue per head. Now, Beijing-based Moonshot AI released Kimi K3 on 16 July, calling it the largest open-weight model yet at 2.8 trillion parameters, with vendor benchmarks placing it on par with leading US frontier models at a fraction of their pricing. OpenRouter lists Kimi K3 at roughly $3 per million input tokens and $15 per million output tokens, well below closed US rivals. Moonshot is backed by Alibaba, Tencent, and Hongshan, and is reportedly raising funds near a $30 billion valuation, making it one of China's most heavily capitalized AI labs. Why it matters: if independent benchmarks confirm the vendor claims, Kimi K3 gives Asia-Pacific builders a near-frontier reasoning model at commodity pricing, which compresses the cost calculus for any team currently budgeting around US closed model APIs. Capital allocators should note the valuation trajectory. $30 billion would place Moonshot in the same bracket as Zipoo and close behind ByteDance's AI yield, signaling that Chinese investors are still willing to price in frontier ambition despite export controls on advanced chips. The rates were not yet public on launch day, with a full open release promised later in July. Whether that release includes unrestricted commercial licensing will determine how quickly Southeast Asian and Indian startups can build on top of it, so watch the license terms closely. That is your AI in Asia briefing for today. Stay sharp, build well, see you tomorrow.